Hello friends, welcome to our channel Easyshots of Learning. Today's video is about integrated accounting. In this video, we will discuss what do you mean by integrated accounting and how we generalize our transactions in this system of accounting. So friends, if you have not yet subscribed my channel, please subscribe my channel, and if you have any query related to this topic, please write me in the comment box. Now, in our previous videos, we have already discussed about non-integrated accounting where we maintain two sets of books. One is the cost book and another one is the financial books. Now, if the company is same, transactions are same, then why there is a need to record the transactions in two different sets of books instead of one book? Suppose if the company purchase raw material, the purchase of material is recorded in the cost book and in the financial book. But when the store manager issue raw material to different departments, then the issue of raw material is only recorded in the cost books. It is not recorded in the financial books because these are the internal transactions of the company to know how much material is issued to which department. But when we are talking about integrated accounting, here we merge these two sets of books into a one book which is known as cost and financial book, where all the transactions of cost book and all the transactions of financial books are merged into a single book to avoid duplication of work, and it also saves our time. Now we discuss about the general entries in integrated books. So first we take all the entries that are related with material. Here we take all three books so that you differentiate between the general entries in these three books. So our first transaction is purchase of material. When the material is purchased, the entry is simple in the financial book, that is purchases account debit to cash or creditors. Now in the cost book, when the raw material is increased in the store, we debit store ledger control account, and in place of cash or creditors, we use general ledger adjustment account because assets and liabilities are not considered in cost books. So in place of these, we use GLA account. But in integrated books, we consider assets and liabilities. So our entry in integrated books for the purchase of raw material is stored ledger control account is debited because debit what comes in, and if the material is purchased in cash, then to cash, or if the material is purchased in credit, then to creditors. Our next transaction is return of material. Now when the material is returned to supplier due to some damage or not up to the mark, in that case our entry in the financial book is cash or creditors account debit to purchase return account, and in cost book in place of cash and creditors we use general ledger adjustment account, and when the material is transferred or returned back to the supplier, then it is reduced in the store, so we credit the stored ledger control account. But in integrated books, our entry is in place of GLA account we use cash or creditors account debit to stored ledger control account in case of return of material to the supplier. Now in our next transactions or entry where the material is transferred or issued from the store department to different departments, in that case these are the internal transactions and they are not recorded in the financial books, they are recorded in the cost books or integrated books. Now when the direct material is issued from the store department to production department, in case of production department we use WIP ledger control account. So our entry in the cost book and integrated book is WIP ledger control account debit in case of material is transferred to the production department, and stored ledger control account is credited because credit what goes out. In our next transaction where the material is transferred to factory, this is our indirect material. In that case we debit the factory overhead control account and credit stored ledger control account. In our next case or transaction, the indirect material is issued to office and admin overhead department, then we debit office overhead control account and credit stored ledger control account, and when the indirect material is issued to selling department, then our entry in the cost book and in the integrated book is selling overhead control account debit to stored ledger control account. Now when we do entries related with issue of material, we debit that department where the material is transferred and credit stored ledger control account because material is transferred from the store. Our next transaction is where the material transferred from job number 5 to job number 7. Now job number 7 is the receiver, and we debit the receiver and credit the giver. So here our entry in the cost book and integrated book is job number 7 account debit to job number 5 account. In our last transaction where we pay or the payment made to creditors, creditors is our liabilities, and all the liabilities are debited when decreased. So in case of payment to creditors, our liability is decreased, so we debit the creditors and we pay the creditors in cash, so to cash account. Now in place of liabilities we use general ledger adjustment account in cost books, and in place of assets we also use GLA account. So in both the sites we use GLA, so there is no entry should be passed in cost books, and the same entry is passed in the integrated books for the payment of creditors, that is creditors account debit to cash account. Our next transactions are related with wages and salary paid to employees or workers. Now when we pay wages or salary, they are the expenses and all expenses are debited. So our entry in financial book is wages account debit to cash account, and in cost books in place of wages we use wages control account, and cash is an asset, so in place of cash we use general ledger adjustment account. And again general ledger adjustment account is not considered in integrated books, so here for the payment of wages our entry in integrated books is wages control account debit to cash account. Our next transaction is related to recover or charging of wages to different departments. Now when we charge wages to that department where the workers are worked or giving their salaries, giving their services, then that department or overhead account is debited and wages control account is credited in that case. So when the charging of direct wages to production, in place of production we use WIP ledger control account, so our entry here is WIP ledger control account debit to wages control account. Our next transaction is where we pay wages to those workers that are worked in factory but they are not directly related with production, so these are the indirect wages. Now when we pay or charge indirect wages to factory, then our entry in the cost books and in the integrated books is factory overhead control account debit to wages control account. When we charge or pay wages to office department, then our entry is office overhead control account debit to wages control account. And when we charge wages for those workers who are working in selling department, then our entry is selling overhead control account debit to wages control account. Now when we pay the wages, then wages control account debit to cash account in integrated books, and when we charge wages that department is debited and wages control account is credited. Now our next transaction or general entries are related with overheads. So first we understand this flowchart so that we can easily generalize our transactions in integrated books. In cost books we have to open three accounts. First account is store ledger control account for all the transactions related to material. Second account is wages control account for the payment of wages and charging of these wages to different departments. And third is factory overhead control account for all the expenses related to factory. Now these three account balances are transferred to production department or WIP ledger control account. Here we open another account which is office and admin overhead control account, and the balances of these two accounts is transferred to finished stock ledger control account. Here we open our last overhead which is selling and distribution ledger control account, and the balances of these two accounts is transferred to cost of sales, and the cost of sales and sales are transferred to costing P&L to find out the profit in the cost books. Now when we charge or recover different overheads to different departments, if we charge or recovered factory overhead, it is charged with production department, so we debit the WIP ledger control account and credit factory overhead control account. Our next overhead is admin overhead. Office and admin overhead is charged with finished stock ledger control account, so in this case we debit finished stock ledger control account and credit admin overhead control account. And our last overhead, which is selling and distribution overhead, it is charged with cost of sales. So we debit cost of sales and credit selling overhead control account. So these are the entries related with charging or recovering of overheads. So now we generalize these transactions. Our first transaction is factory overhead incurred or paid. Now factory overhead is an expense and all the expenses are debited. So in financial book, our entry is factory overhead account debit to cash account. Now in place of cash, because it is an asset, we use general ledger adjustment account in cost books, and in place of general ledger adjustment account, we use cash in integrated books. So for the payment of factory overhead, our entry is factory overhead control account debit to cash account. Now our second entry related with factory overhead recovered. Now the factory overhead is recovered with production department. So our entry in the cost books and in the integrated book is WIP ledger control account debit to factory overhead control account, as we have already discussed in our flow chart. Our next transaction is office and admin overhead incurred or paid. Now office and admin overhead is an expense. So we debit office overhead account debit and the overhead is paid in cash. So to cash. Now in place of cash, in cost books we use general ledger adjustment account, and in place of general ledger adjustment account we again use cash in integrated books. So our entry for the payment of office and admin overhead is office overhead control account debit to cash account in integrated books. Our next transaction is office and admin overhead recovered. Now these overheads are recovered with finished stock. So we debit finished stock ledger control account and credit office overhead control account. Our next transaction is selling overhead incurred and paid. Now the selling overhead is an expense and all expenses are debited. So again, our entry in the integrated book is selling overhead control account is debited and cash account is credited because we pay the overhead in cash. Our last transaction related to overhead is selling overhead recovered, and it is recovered from cost of sales. So our entry in integrated books and cost book is cost of sales account debit to selling overhead control account. Our next entries are related with some other transactions, but they are so much important that we should have to understand these entries. So our first transaction is material purchased for special job. Now when the material is purchased for a special job or used in manufacturing of some special finished product, then they are directly transferred to the production department. But when we generalize these transactions in financial book, our entry is same as of normal job, which is purchase account debit to cash account. But in case of cost books, they are directly transferred to the production department, not to the store department. So in place of production, we debit WIP ledger control account because debit what comes in, and in place of cash we use general ledger adjustment account in cost books, and in integrated books in place of GLA we use cash account. So for material purchased for a special job, our entry in integrated books is WIP ledger control account debit to cash account. Our next transaction is finished goods produced, which is produced in production department, which is known as WIP ledger control account and transfer to finished stock ledger control account. Next transaction is cost of goods sold, and our last transaction for transfer of goods is cost of sales. First we understand these transactions with the help of our flow chart. So first we erase all these things. Now when we say that finished goods produced, they are produced in the production department. So in case of finished goods produced, the goods are transferred from WIP to finished stock ledger control account. So we debit the finished stock ledger control account and credit WIP ledger control account. Our next transaction is cost of goods sold. In that case, we transfer the goods from finished stock ledger control account to cost of sales. So we debit the cost of sales and credit finished stock ledger control account. And our last transaction where we transfer the goods from cost of sales to costing P&L in case of cost of sales. So we debit the cost of costing P&L account and credit cost of sales account. So when we generalize these transactions, our first transaction is finished stock produced. In that case, we transfer the goods from WIP ledger control account to finished stock ledger control account. So we debit the finished stock ledger control account and WIP ledger control account is credited. In our next case, cost of goods sold is there or finished stock at cost. In that case, we transfer the goods from finished stock ledger control account to cost of sales. So here our entry is cost of sales account debit to finished stock ledger control account, and our last transaction, which is cost of sales, where we transfer the goods from cost of sales to costing P&L. Our entry in cost books and integrated books is costing P&L account is debited and cost of sales is credited because credit what goes out. Our next transaction is sales, and sales is our income and all the incomes are credited. So here our entry in the financial book is cash or debtors account debit to sales account. Now in place of cash or debtors, we use general ledger adjustment account in cost books, and these are not considered in integrated books. So here our entry is cash or debtors account debit to sales account. Our next transaction is receipt from debtors. When we do credit sales, we generate debtors and we receive amount from the debtors. Then our entry is cash account debit to debtors account. Both are the assets, and in place of assets we write general ledger adjustment account in cost books. So there is no entry passed in cost books, so same entry passed in the integrated accounts or integrated books, which is cash account debit to debtors account in case of receipt from debtors. Our last transaction is depreciation for the month on plant and machinery. Now depreciation is a loss and all losses are debited. So we debit the depreciation account, and due to depreciation the value of the machine is decreased. So we credit plant and machinery account. Now in place of, because depreciation is an expense which is related to factory, so in cost books our entry is factory overhead control account is debited. In place of plant and machinery, because it is an asset, we use general ledger adjustment account. Now in place of general ledger adjustment account, we again use plant and machinery in integrated books. So here our entry for the depreciation on plant and machinery is factory overhead control account debit to plant and machinery account. So friends, in this video, first we understand what do you mean by integrated accounting and how we generalize the transactions related to material, wages, overhead and other important entries. So friends, if you like this video, please share this video and subscribe the channel. Thank you so much. Have a nice day.